Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I am going to show you a brand new, really powerful indicator that may be indicating that the Qs may be the new index to watch for leadership on the downside, where the IWMs have been the leading index when we needed to identify when the markets were ready to go back down. That baton may have just been passed off to the Qs, and the IWMs may have actually reversed roles and be the ones we look to see if the market's going to head higher with any leadership. All right, so before I get into showing you what this new indicator is and looking at the markets, let me just make sure if you're just finding us on YouTube that you subscribe to our channel. Also, please know you can get this video as well as many others at marketgauge.com/tutorials, and even more information if you follow us on Twitter at MarketGauge and at MarketMinute. All right, so before I even get into this indicator that you can see on the bottom of my screen, I want to just point out what typically we would be looking at in terms of market performance. So we're looking at a daily chart of the Qs, and we're looking at the green line being the 200-day moving average, the blue line being the 50-day moving average. I want to focus your attention on those. The magenta moving average is the 10-day moving average. But I want to take a look at the big picture of the markets here and try and get an assessment of the question that most traders are probably asking at this point, especially going into the Fed announcement later this week on Wednesday. So the question as it pertains to that is, if the Fed's announcements begin a new move to the upside, should we be trusting that that move could continue? And on the flip side, if it moves to the downside, if the Fed news and earnings as they come out later this week push the market further down, what should we be looking for the markets to do in terms of follow through? Should we believe the follow through or should we not? All right, so a lot of times what we do here at MarketGauge is we identify which market is the likely leader if the market's going to go higher, and which is the likely leader if the market's going to go lower. So one of the ways that you assess that is by momentum. You know, which market has better upward momentum, and that's the market you look to be moving up when you expect the markets to continue. If your leader is not moving higher, then you really can't expect the other indexes to follow suit. Now, the same thing is true on the downside. So the trick there, or the art and the science there, is to figure out, well, which one is really the leader? Well, while this indicator is that I'm showing you right here is not specifically for just this analysis of the Qs versus the IWMs versus the SPYs and which one is leading, this indicator that we looked at, that you'll see down here on the bottom, and I'm going to go over the kind of dots. The dots are I could make them into a line, but they're dots, and it's basically a measure of momentum. All right, and momentum, just like price, trends, breaks trends, diverges. And so when we look at a momentum indicator, especially on a long-term daily basis like this, we want to see it doing the same thing or leading the market action. So if you were to just look at the Qs right here, a basic description of a divergence would be that as the market was going up in here, this momentum indicator was going down. Now, how to interpret that and profit from that is a video for another time, but what you can see is that over time the trend in momentum was weakening, even though the trend in price remained visibly strong. And when you have a divergence like that, and then your price breaks a meaningful number like this 200-day moving average, well, you don't really expect that a 200-day moving average is going to be very strong when the momentum is weakening. You don't really expect when the market makes a new high and the momentum continues to weaken that a pullback in that market again is going to hold up. So right now, as we look at the Qs have not been able to break out to new highs. So for right now, this isn't a divergence. But what is happening is the Qs haven't been able to really break their trend in momentum. So this is a little concerning. But I started the video by saying maybe the Qs have become the new market to watch for leadership on the downside. You can't really see that in this chart by itself, other than the fact that the Qs seem to have bumped their head up against a level that for the past well over a year, from a trend perspective, has been resistance. Now, yes, I know this is resistance 2, this is resistance 2, so this is just a confirmation of the fact that the Qs don't have enough momentum to break that momentum trend. Now, here's where it gets interesting. Let's take a quick look at the SPYs, because the SPYs, as you're going to see in a minute, are in the middle of the Qs and the IWMs. And what I mean by that is the SPYs, their momentum trend, again, this too was deteriorating all during a period when the SPYs were climbing. However, every time the SPYs would kind of get weak and fall under their 50-day moving average, still maintaining their 200-day moving average, they would recover, all right? And so from a price action, they kept recovering. They just got a little weaker and weaker and weaker. So we look at the trend of that momentum, and the SPYs have begun to break it. But if we accelerate that trend, which would be more equivalent to the line I showed you in the Qs, the SPYs actually broke out on momentum right in here as they were breaking their 200-day moving average. So while the Qs broke their 200-day moving average and pretty much stalled out right here, IWMs continued to move higher. Momentum has continued to break its trend. So from a momentum basis, the SPYs, well, not perfect, right? They still have this trend line up here that they're contending with right now, but the trend line that was equivalent to the Qs, they've broken and moved higher. That said, it's still kind of struggling at that momentum line. But if the SPYs were able to break out, we would have the momentum confirming that breakout. All right, we can't really say that all that easily with the Qs. So the Qs, in terms of the SPYs, lagging. Now let's take a look at IWM. Now, just from a price action point of view, IWM has been the weaker of the three indexes. All right, IWM, however, breaking its trend line from the highs in terms of price, breaking its 200-day moving average. On a momentum basis, this thing also broke out, and it broke out well before it even got to the 200-day moving average. Right? In terms of breaking momentum levels, it's taken out this level as well. So early in this video, I said maybe that IWM may become the new leader to watch out for if the market is moving higher. And this is exactly why. The momentum on IWMs has picked up in a much stronger way since the lows of the year than any of the other three indexes. All right, so the IWMs also over the last couple days have been the strongest. Now, I don't want to say that just because the last 3 days and it's the strongest, that's going to make the market going forward for weeks or months. What will make the market, or what will be more of a determinant of the market for weeks or months, is this longer term trend breaking through the momentum. So where does that leave us with the Fed later this week? If the Fed's volatility, or the meeting from the Fed's volatility, pushes the market higher, and the IWMs push higher, leading the way still, then that's an environment where the market could be telling us it wants to go higher. If the markets go lower and the Qs really push lower and IWMs follow the Qs lower, then we've got to watch out for some serious downside. All right. So this is, like I said, a new momentum indicator. It's incredibly powerful when you see it work on individual stocks. It's just as powerful. And if you want to learn more about it, we're going to do a webinar this Thursday night. I'll put the link to it in the text along with this video. So you can go to marketgauge.com/tutorials to find this momentum indicator webinar and this video if you're not seeing it on our site. And I look forward to seeing you in the next video.